Hey people, I welcome you all to Caroline's Online Academy. So what we're going to be doing now is we're going to be solving previous year questions from the chapter Accounting for Share Capital under the topic Preparation of Schedule of Share Capital as per Companies Act 2013. It's almost like this is a compulsory question. It's almost like CBSE wants to give you this 3 or 4 marks, because this question can be found in every single question paper for the past 5 years or so. Because they've this is a question that is asked from accounting for share capital as well as from the chapter financial statement of companies, and CBSE finds it important to ask this question every time. So it's very important that we learn this properly. There are 4 kinds of questions that are asked. How will you prepare the schedule of share capital when there is no calls in arrears or when no shares have been forfeited? That is the first type. The second type is when there is calls in arrears but no forfeiture or anything. And third is when there is forfeiture but no calls in arrears. That is, calls in arrears would have been there, but it has already got forfeited. And the fourth is a question where there is calls in arrears and forfeiture. They may also give you a question in which some of the forfeited shares are reissued, but that's easy because then they become the normal shares, right? When they're reissued, they become shares. That's all. How to present this is what they're asking us. They're asking us to prepare the schedule. They're asking us to show if you know how to present this in the share capital or not, understood or not, in the balance sheet or not. That is what they're asking us to find out, and it's easy. So I've taken for so as a first problem, I've taken a question from 2018 main board exam question paper. This was asked for 3 marks. NK Limited, a truck manufacturing company, is registered with an authorized capital of rupees 1 crore divided into equity shares of rupees 100 each. The subscribed and paid up capital of the company is 50 lakhs. The company decided to open technical schools in Jalaghar district of Rajasthan to train the specially able children of the area. It is planning to provide them employment in its various production units and industries in the neighborhood area. To meet the capital expenditure requirements of the project, the company offered 20,000 shares to the public for subscription. The shares are fully subscribed and paid. Present the share capital in the balance sheet as per the provisions of the Schedule 3 of Companies Act. So this is one of the easiest questions that had been asked in board exam till now. As you can see in this question, there is no calls in arrears or share forfeiture. All the shares have been fully called up and fully paid up. As you can see, the company already has a paid up capital of 50 lakhs as evidenced by this statement here. Whatever is there in between is just nonsense. You can ignore it. And now the company is offering 20,000 shares to the public, which is also fully subscribed and paid, as evidenced by here. Understood or not, my dear children? And there is no evidence of any calls in advance, calls in arrears, or anything. Irrespective of what it is, the first thing that we do while solving questions like this is always prepare the face of the balance sheet. So you write in the books of NK Limited, extract of balance sheet. It's an extract of balance sheet because we're not preparing the entire balance sheet. We are only preparing the share capital portion of it. We are only showing how share capital is shown in the balance sheet and the notes to accounts of the company. So we'll only write extract of balance sheet as at March 31st dash. If you want, you can also add as per Schedule 3 of the Companies Act 2013, but that is a given. We're preparing it according to that only. Particulars, note number, current year, previous year. Now, this is the format given in the Schedule 3 of the Companies Act. So this is not something that you can change according to your wishes. Should be exactly like how it's given in the Act. And these two are number columns. So yeah. Now what do we write here? First you write Roman letter 1, equity and liabilities, because share capital is shown under equity and liabilities. And under E you write shareholders funds. And under shareholders funds is the heading under which share capital is shown. The subheading is share capital. Now we'll not be able to write the exact amount in the current year now because we haven't computed that in this question yet. So we'll just prepare this and then make the table. We're not going to write any total amount here because we don't have the total. It is only a what? Extract of the balance sheet showing only the share capital details. We don't have information with respect to the non-current liabilities or current liabilities or the other items that are there in the liability side. So we just prepare this, and below this we prepare the notes to accounts. See, all of this you'll have to do in every question, understood or not. You don't even have to look at the question. If it is a question asking you to prepare the schedule of share capital, without writing the numbers, these things you can actually do it directly without even looking at the question. Amount, we'll have two amount columns. And then starts the problem. Okay, yeah, before this, you write what's notes to accounts you're preparing. Share capital. Preparing the notes to accounts for share capital. Understood? All right. Now let's go ahead and do this. First, you write the authorized capital of the company. Authorized capital. Now, how you write authorized capital is, they're given that the authorized capital of the company is rupees 1 crore divided into equity shares of 100 each. So that is 1 lakh equity shares of rupees 100 each, right? 1 crore rupees divided into equity shares of 100 each. So 1 crore divided by 100 is 1 lakh shares. So you write 1 lakh equity shares of rupees 100 each. And in the outer column, you write 1 crore. And double underline this. Remember, double underline this. Now, why are we double underlining this? It's because this will not be considered for totaling anymore. Understood or not? It's done. And that's it. That's it. After authorized capital, we come to the issued capital. Now, let's look at the question. The question says, see, most people are fooled by this sentence. Now the company has issued 20,000 shares to public for subscription. So everyone believe that we are supposed to write 20,000 only there. But the company already has 50 lakh rupees in the share capital as subscribed and paid up. Now, would it have become subscribed and paid up capital had it not been issued? So that 50 lakhs is also part of your issued capital. Understood or not, my dear children? So 50 lakh is the amount divided into equity shares of 100 each. So the total issued capital, total number of shares issued is 50,000 shares from this 50 lakh and 20,000 shares that are being issued now. And therefore, the total issued capital will be 70,000 equity shares of rupees 100 each. That is 70 lakh rupees. Again, you put it, you draw a double underline under that because we are not going to add it anymore. We are done with the authorized capital part and the issued capital part. Next is the subscribed capital. Under subscribed capital, we have two things. One is subscribed and fully paid up. And if in the question you have certain shares that have not been fully paid up. Now, what is fully paid up? Fully paid up means, is it the amount that is called up is a share in which 100 rupees is in case the issue price of the share is rupees 100. Face value of the share is also rupees 100. Called up value of the share is assume 80 and paid up value is 80. Let this be one situation. I'm just trying to explain to you what fully paid up means. Okay. So this is situation number one. And let's assume another situation where face value is 100, issue price is 100, called up value is 100, paid up value is 100. This is situation two. And in situation three, called up value is 100, paid up value is 90. Now you tell me what will you consider as fully paid up? If you tell me you will consider situation two and situation one as fully paid up, then you are wrong, my dear children. Because by fully paid up, you only mean the face value paid up. Understood or not? Only if the entire face value of the shares have been paid up, it will be considered as fully paid up. So this situation two only is fully paid up. Situation three obviously is not fully paid up because they have called up 100 rupees and they have only paid 90. Situation one cannot be fully paid up because we have not even called up the face value of the shares. We only called up 80 rupees on the shares. Understood or not, my dear children? So only situation two is fully paid up. Now let's look at this question. In this question, the company already has 50 lakh rupees as share capital, which has been fully subscribed and paid up. And this 20,000 shares issued were also fully subscribed and paid up, which means what, my dear children? Shares have been fully paid up. There is no subscribe but not fully paid up. There are only subscribed and fully paid up shares. How many shares? 70,000 equity shares of rupees 100 each, rupees 100 called up. And that is 70 lakhs, my dear children. No double underline here because this will form part of your total. Understood or not, my dear children? And then you add this. As we don't have any subscribed and not fully paid up capital, this would be it. Just draw the box. So the total of the working note will be taken to the face of the balance sheet and written in the current column. So this 70 lakh will go here on the face of the balance sheet. The total. And that would be the end of this problem, my dear children. See how easy this is. This is like CBSE wants to give you these marks and therefore they ask this question. Understood, my dear children? So you prepare the face of the balance sheet and then you prepare the notes to accounts. You start with authorized capital, issued capital, and subscribed capital in the notes to accounts. You find out if there is any subscribed and fully paid up and subscribed and not fully paid up. If there is subscribed and fully paid up, then you you bifurcate the shares issued into subscribed and fully paid up and subscribed and not fully paid up. If there is no subscribed and not fully paid up, you just write subscribed and fully paid up and be done with it. If there is no subscribed and fully paid up, then you just write subscribed not fully paid up and be done with it. That's it, my dear children. You just have to identify these things and that's it. It's so simple, my dear children. Anybody, any one of you can do this, and I hope you'd get this right in the board examination when they ask this question. All right. So with that, we have come to the end of this video. We'll see more preparation of share capital problems. We have various types, right, with call scenarios, with forfeiture and all that. We'll see how to present that when those questions are asked in the upcoming videos. And you people have fun